all the macro fundamentals for gold and silver, you talked about the counterfeiting, we've talked about the increase of money supply, the transfer of wealth. I've been covering it here on this channel and I thought it was going to be bad. I mean, it's like it's the snowball's a lot further than I thought it was. So one would think that this would be the fuel for gold and silver. What do you think has held it up, especially as we're starting to see this come into a real domino effect?
Great question, Jake. Always check your premises. So let's talk about why, if all of this is true, nothing has happened yet. In the first instance, investors of my age have been trained over the last 40 years that everything's under control, that no matter what sort of difficulty we get ourselves into, be it the tech wreck of 2000, the liquidity squeeze of 2008, the more recent COVID squeeze, it doesn't matter that the Fed has your back. The problem with that thesis is the Fed has already spent its easy ammo. Do they take the interest rate below zero? Do you have to go to the bank and give them a toaster to open an account when they used to give you toasters for opening an account? My point is that what worked in the past doesn't necessarily work in the future, but the expectation of the future has been set by investors' experience in the immediate past. And in the immediate past, things just got better and better and better. And if any time things didn't get better, then the Fed came to your rescue, even to the extent of, quote, helicopter money during stimulus, where in a labor short economy, the Fed in their wisdom paid people not to come to work. The circumstance that you're talking about, which is to say the cost of living greatly outpacing average people's ability to earn, is something that is going to occur to people over two or 3 years, which is to say that the paradigm to look at the circumstance that they're experiencing is going to change before your very eyes. We had 40 years to learn that inflation wasn't a problem, that government was our friend, all of those types of things. They didn't happen to be true, at least towards the end of that era, but people believed them to be true. The idea now that people will willingly buy a 10-year treasury, will willingly accept a 1.5% return in a currency that's depreciating by 5.5% means that we live in an era where narrative is more important to people than arithmetic. But the truth is, Jake, over time, arithmetic always wins. You will recall, and I think this is very instructive, Jake, to you and your listeners, that 2 years ago, when you and I would talk about uranium on this show, your listeners experienced a collective yawn, except for the more idealistic among them, who sent us hateful emails saying that we were promoting Hiroshima, Nagasaki, and 3 Mile Island. When the uranium price went from $18 a pound to $50 a pound, in other words, after the uranium price had almost tripled, after the easy money had been made, everybody cared. We're going to be talking about silver today, and some of your audience is going to say, oh shit, same old song from Rick. Silver, he's been talking about silver for 18 months. And 2 years from now or 3 years from now, when the price of silver is above $50 and the silver equities have all tripled, these same people who are snoring and yawning today are going to be begging you for a list of silver stocks after they've tripled. That's the lesson. It's just wonderful.
Yeah, it is wonderful. So let's talk a little bit about silver. I was talking to a friend that knows one of your colleagues, Eric Sprott, quite well. Someone that's another financier that's done quite well and everything, and all different types of commodities. And he was fishing with Eric a couple weeks ago, and I said, well, you got to tell me, the inside scoop. And he said he tried to get Eric's attention and talk about a bunch of different commodities, whether it was uranium or copper, but all Eric is interested in is silver, and he's convinced silver is going to $100. And he kind of laughed about it. He said he just wanted to talk about silver, and he says he's certain it's going to $100. Why is it that two of the biggest financiers, you and Eric, are so focused on silver? Let's talk a little bit about that. I mean, you're ringing the same bell that he apparently is.
Well, I need to begin by saying that although I'm a very good investor, as a speculator, Eric's in a league all of his own. He really, truly is superb. I've known him for a very long time, and I'm in awe of his discipline, his tolerance for volatility, his tolerance for pain, frankly, and his timing. Understand that Eric is a legitimate billionaire. And what Eric is interested in is betting what would be to most people extraordinarily large amounts of money with a willingness to lose it all in hopes of getting a 20-1 gain or a 30-1 gain. I mean, Eric is a true punter. So the first thing I'm going to say to your audience is don't try this at home, folks, unless you have the fiscal and psychological stability to play the game. But what is useful to know about Eric, and the part of Eric that I try in my own small way to emulate, is two things. He is a chartered accountant, which means that he understands economics and money from a practical viewpoint. He's not like a guy at the Fed who, gets to counterfeit and tell you what to do. Rather, he is a guy who studies the real economy and speculates based on his understanding of the real economy. And Eric knows that precious metals bull markets are much greater in terms of duration and dimension than other people know. Many people have said to me, Rick, this bull market is by your reckoning already long of tooth. It's already 4 years old. They say the same thing to Eric. Both of us point out that the two prior bull markets in our career were 10 or 11-year bull markets, which is to say we aren't halfway through. And in terms of dimension, people say, well, the silver price has already gone from $14 to $22 or $23, well, 30 on its way, and then on its way back down. Hasn't the easy money been made? Well, in the first bull market of my life, the silver price went from $1.50 to $50. In the second bull market of my life, silver went from a more advanced $5 to $50, which is to say a 10-bagger. So when people say to me that the bull market has run its course, either by way of duration or dimension, I say to them, perhaps you're not as old as me. Perhaps you haven't studied history, or perhaps you were just a lousy student. And I have noticed in prior precious metals bull markets that the first half of the bull market was gold-centric, and the second half of the bull market was silver-centric. And when the momentum was established by gold, then silver picked up. And when the silver was established by the momentum occurred in physical silver, then the silver stocks, at least the high quality ones, really surprised people with the extent and the rapidity of the rise. The writing is absolutely on the wall with precious metals. History teaches us that when momentum is in precious metals, the market becomes silver dominant. And history teaches us too that the most explosive asset class in precious metals is silver equities. It's right in front of you, but for most of your listeners, until the thesis has run its course, which is to say, until the opportunity is less attractive because of price, people won't care. The game is to care when Eric Sprott cares, when the arithmetic is right and nobody else gives a damn.